Hey everybody, how you all doing? It is Tuesday, October 10th. Yesterday, by the way, I was occupied with writing the MMT Trader Report, this week's issue. If you want a copy of that, and I don't know anyone who doesn't, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. And while you're there, why don't you try out zombie trading? It is my Forex short-term signal trading service. We front run the zombies and get out before they die. All right, let's talk about what's going on. You know, I read a lot of funny stuff. And I came across an article today. The author's name is Axel Merk. Maybe some of you have heard of Axel Merk. I know Axel because going way back when I was still at Fox News, back around 2007, 2008, 2009, they used to have Axel come on from time to time, as a guest and comment about whatever. But his big thing, he's one of these hard money, gold bug kind of guys. He's one of these Peter Schiff type of guys. Like the United States is going broke, it's going bankrupt. And I remember back in 2007 and 2008 and 2009, all during that time, he's like, the dollar's going, and by the way, he's from Switzerland. He doesn't have the Mark V, but the dollar's going down. No. But he was always, you got to sell the dollar's going to crash, the dollar is going down. And of course, and interest rates are going to skyrocket because the Fed is printing money. They're printing money. And all that stuff, which of course was completely, and inflation's going to blow through the roof, right? So all that stuff, he was very, very consistent constantly with this message about how, they're printing money. And, just again, completely lacking in understanding of monetary operations. What exactly was, quantitative easing? What did the zero rate entail? All right, not understanding that, the government is a net payer of interest. They put the rate down to zero. That lowers prices across the board. It's a general reduction in prices. It removes income from the economy. Yada, yada. I've gone over this a million times. So, of course, the dollar went up. Inflation went down. Nobody can understand it. Even Yellen to this day, we don't understand inflation. Well, you are the price setter. I mean, that's like unbelievable. Like Walmart saying, we don't understand why our prices are this, or Amazon saying it, or John D. Rockefeller of Standard Oil. I don't know why my oil price is, $3 a barrel, because you said it there, okay? So anyway, I told you I read funny stuff. So Axel Merk, who was this big gold bug and big dollar bear for so long, an inflationista, hyperinflationista, I find an article today that he wrote just today. What's going to happen to gold with tax reform? All right. Now, here's a guy who's super bullish on gold. He's a gold bug. The dollar's going to hell. They print the money. Hyperinflation. Right? So what do you think he says? He goes in this big, long, convoluted discussion about, the comparison between different asset rates of return and economic productivity and the risk-free rate and risk premia and all these fancy words in there and everything. Like I really had a hard time almost understanding it. And then he says tax reform is going to be bearish for gold. He says tax reform is going to be bearish for gold because it's going to increase the productivity of the economy. So like he totally doesn't understand that tax reform, and really what they're shooting for here is tax cuts. Tax cuts are the fiscal equivalent of a net increase in government spending, right? It just puts more money, you keep more money in your pocket. Instead of the government taking it away, you keep it. So it's the fiscal equivalent of more spending. And that is a stimulus. It's inflationary, all else equal. All right, tax cuts do not necessarily and automatically mean it will be met with an equal, if not greater, amount of output. All right, it depends on how the tax cuts are structured, but the point is he totally misses it. He totally misses it. Now these guys, and he's not alone, because some of these guys are just permanently bullish on gold because they have nothing else other to talk about. Everything for them is the dollar's going to collapse and gold's going to go up, and the debt is going to sink us, even though we have no debt. But he goes through this long, convoluted explanation, which has nothing to do with what moves gold. Gold's an inflation hedge, okay? Everybody knows that. And it's an industrial metal. You're getting a stimulus. And then he tries to talk about, monetary stimulus, that raises the price level. How does that happen? We just saw the Fed raise its balance sheet from $800 billion to $4.5 trillion, and prices went down, right? Fiscal stimulus raises the real price, like all this stuff that just doesn't make any sense. So you see these gold bugs, when they finally have the chance to be bullish on gold for the right reasons and to explain to people why they should be good. And by the way, folks, again, all right, let me just make this statement. I am not a gold bug. I have never been a gold bug. I do not consider gold to be money. To me, it's a tradable market. It's an industrial metal. It's an inflation hedge for many people. That's how it is considered. So you got to buy it when inflation is going to go up. And that's with a fiscal expansion, which is exactly what tax cuts or tax reform is attempting to achieve. But they don't see it. They don't see it. These very folks who now should be pounding the table about why gold is going to go up, and not just because that's the only thing they ever say. If they're saying it now, they should tell you why in a rational, logical explanation like I just did, why it's going to be going up. But they can't. They don't understand. So this guy says it's going down, but the funniest thing, at the very end of his article, he says, well, you should own some anyway, just for the heck of it. So what was the point of going through that whole ridiculous, nonsensical explanation? Folks, this is what you did. And these people are out there, and they're put out there, and the media considers them, these big experts on finance. And they do well. I mean, personally, for them, they do well. But they're not good investors, and they don't know what they're talking about. I read funny stuff. Yeah, everybody. Be back later. Bye-bye.